Hi everyone, let's go through my preferred bullish and bearish scenarios on all the time frames from the macro to the micro, including potential trading setups. Starting with the bearish scenario on the macro time frame, where this is a 5-wave structure to the upside in an impulse, then followed by a 3-wave to the downside in a WXY with targets of at least 12.6k. Now, what I don't necessarily like about this scenario is the fact that this wave 4 over here is very short in time compared to this wave 2, which is larger in time. Usually a wave 4 takes more time to form instead of a wave 2, but as you can clearly see in this scenario, that is not the case, and that is something that is very, very rare. If we now look at the bearish scenario, the corrective structure over here, we have a 3-wave in the W, 3 waves in X, and then a 3-wave in wave Y as to be expected, with the minimum target for wave X usually being the 0.382 at 29.6k. Also a nice confluence with this support resistance area over here and a weekly order block. This then leads us to a potential short scenario where the shorts can be laddered in this area, stop loss safely above for then a trade to the downside. If we look at the more bullish scenario, this is probably between the two my preferred scenario at the moment, just because this wave 4 looks a lot better. We now have a wave 1, 2, 3 over here, 4 and then 5, with targets for wave 5 between 98k and 174k. Inside of this wave 3, we now have the yellow 1, 2, 3, 4, 5 count, and now you can see that this wave 4 over here fits very nicely compared to this wave 2, where also this wave 4 is now longer in time compared to this wave 2. If we look at the wave 4 low, it bounced perfectly on the 0.5 Fibonacci, taken from the low of 2 to the high of 3. It also, the exact weak low was made on the 0.618 Fib time, also taken from the low of 2 to the high of 3. And we had a nice volume peak at the lows, which is something you generally like to see at reversal areas. The same happened at the low of this wave 2, before then a very impulsive move to the upside in a wave 3. The two potential trading setups can be seen on the chart. The first one has already been in the past, basically. That was entering just above the 0.5. Stop loss below the 0.5 Fib, as you do not expect high time frame candles to close below the 0.5 for a wave 4 and then trading it to the upside. The more safer option, however, is to ladder longs inside the retracements. Over here, stop loss then below the low of wave 4, trading it to the upside for the targets of a wave 5. If we then go to the high time frame, which for me is the daily time frame instead of the weekly time frame, we start with the bearish scenario as well, but a little bit of a deep dive into this wave X. So we now have a WX looking for a Y to the downside. Now, if we look at the autonomy of this wave X, we have a B, C over here, with the B bouncing perfectly on the target for a expanded flat wave B between the 1.236 and the 1.38, taken from the low of W to the high of A, for then an impulsive move to the upside. If you look at this impulsive move, what is important to know is that currently these fibs over here is the target area for a wave 5 pulled from the high of 3 to the low of 4. And as you can see, price has been ranging here for a very long time. And in my opinion, on the lower time frames, wave 5 is very likely to already be in. Also, if we look at this wave C, the most common target area for a wave C is the white box over here. So we reached the most common target for a wave C inside the most common target for a wave 5. And we got quite close to wave X as well. However, we did not yet hit the 29.6k level. That is something to note, because this is again the most commonly minimum target for a wave X in a WXY. If we then look to the downside, the target for a wave Y, the 0.618, sitting at 12.6k, has nice confluence with this area over here that we haven't seen since the bull run in 2020. If we then switch to the bullish scenario, this move to the downside from the all-time high is a WXYXZ, which basically means it is a 3-3-3-3 and then a final 3-wave move. If we then look at this being the first wave of then a very bullish scenario in a 2 and eventually a 3 for way more upside like the macro has shown, we're looking also again at ending this wave 5 somewhere around this area. If not, it might already be finished. But again, this is a very nice support resistance area. The 30k level is such a big area in general. It's also a nice round number, psychological number, weekly order block. So there's a lot of resistance right above where we are, and actually where we are as well, for then having this as the end of a potential wave 1. Looking then for a trade to the downside for a wave 2, where one can ladder again in the target area of a wave 5, stop loss below to the downside. And then the most common targets for wave 2 is between the 0.5 and the 0.786 Fibonacci, basically between 21.1k and 17.7k. But out of these more common targets for wave 2, by far the most common one is the golden pocket area, which also has nice confluence with the low of this wave 4, for then maybe a little bit of a liquidity grab and then a move to the upside, where the stop loss for that potential long setup is below wave Z and the targets are towards 100k. And what is nice as well, basically from a more psychological reason, I suppose, is that if we take this low over here, I can imagine the market is going to be very bearish again, because hey, people are going to be like, yo, we changed market structure, we took this low, we're back again below 20k, la di la di la. So people start selling into the bigger pockets of the market makers and the markets in general, for then a move to the upside, baiting all the people out that sold their Bitcoin right there. If we then go to the medium time frame scenarios on the Bitcoin chart with the Elliott Wave scenario I have in front of you, we have this final wave 5. So this is the final green wave 5, as you've seen on the high time frame and the macro time frame, but now on the medium time frame, so we can see what this wave actually consists of. In this particular scenario, wave 1 is extended. So that is quite unique, because usually in an impulse wave 3 is extended. But now wave 1 is extended, then we have a 2, 3, 4, and then eventually wave 5 over here. And because wave 1 is extended, wave 2 most common targets are these fibs, the 236 and the 382. The wave 4 most common targets are also the 236 and the 382. Wave 3 does not have a target if wave 1 is extended. And the wave 5 most common target is between the 0.618 and the 786, pulled from the low to the high of 1 to then the low of wave 2. And as you can see, a candle wicked inside this target area over here, for, in my opinion, that being the end of this wave 5, and this being the beginning of a corrective structure for eventually more downside. The potential trading setup that we had for this scenario was entering the shorts over here in this area, stop loss above, trading it to the downside, but by now the stop loss, in my opinion, should be at least break even, also with the potential to still have a little bit more upside in an ABC expanding flat corrective pattern, taking out your break even stop loss at that moment, but maybe laddering higher in. Of course, this is no financial advice, everything is purely educational based on Elliott Waves, guys. You know how it goes on YouTube. Then we have this other very bullish Elliott Wave scenario on the medium time frame. And this is actually my preferred scenario. So where this scenario over here is an explanation of the wave 5, this is basically what I'm looking for a corrective pattern to the downside. So over here, more bullish, we have then a wave 1 and a wave 2, and then another 1, 2, before then a 3 to the upside. So this is the high time frame count, with this then being the medium time frame count. I don't really like, however, the fact that wave 2 would be over here, because this wave 2 is very short. It's only 23% of the time it took to develop wave 1, and usually it is 38% of the time, well, minimum I should say, 38% of the time it took to develop wave 1. So this wave 2 is very, very short in comparison, and that's why my preferred scenario is having this wave 1 over here. But well, in this scenario, we're just looking at this corrective structure anyway. So what you see over here is a bars pattern, and actually this is a little bit of price history from 2021 copied on the chart as we have it right now. Now, as you can see, what I'm looking for is this then to being the high of either like wave 5 on the medium high time frame, or a wave 1 and then a 2, 3, or of course we go deeper, it doesn't really matter. But what I'm looking for is basically an expanding flat in this first structure over here. So 3 waves in an A, followed by 3 waves in a B, and then a sharp C to the downside, followed by a bit of ranging and then another move to the downside. And this also works quite nicely with the target boxes that I have and the confluences in those target boxes, because then one finds support over here, which we kind of already have done, then find resistance at this target box, which is between, for the ones that want to know, 31.28 and 29.2. Then eventually we move to the downside and hit this target box for the first time, which is between 24.850 and 24.3k. Eventually ranging again a little bit to the upside. It's quite likely in general that we then hit the point of control of this very big range over here, before then another move to the downside, where the golden pocket over here is an interesting target in confluence again with the target box that I have over here, which is between 22.6k and 21.8k. So on the medium time frame, this is indeed a very interesting scenario. And if I quickly remove this bars pattern, what you can see is we now have the beginning, one could say, looking now for maybe a move to the upside for the wave B, where the most common target for wave B expanding flat is the 1.236 and the 1.38, sitting at 29.6k to basically 30k, and then eventually a move to the downside for that wave C. The potential trading setup over here is laddering the shorts inside the wave B target area for then a move to the downside, which can of course be quite a big trade, because in the end this does not have to be the target. Yes, in a bullish scenario the target is somewhere over here. However, in the bearish scenario or the other bullish scenario that I've shown you, the target can be taking this low, or the target can be even all the way down for a wave Y. So very, very interesting indeed. If we then go to the low time frame, my first scenario that I like to show you, which at this moment is still the preferred scenario as well, is this first structure, three-wave structure, being part of a wave A. So we have a wave A over here looking for three waves in wave B, because wave B is a three-wave structure, or has to be at least in an expanding flat, before then an impulsive move to the downside in a wave C. Now over here you can see price bounced perfectly on the target area for a wave Y, for then the potential long setup that we had before this happened, laddering the longs in this area, stop loss below, trading it to the upside, where the first resistance been reached basically for either a take profit, but at least stop loss by now, of course, break even, and then looking for the target of a wave B over here. And then the opposite trade, as just mentioned, laddering over here potential shorts in this area, stop loss below the 1.618, because this is a rare target for an expanded flat wave B. It would be quite high if price goes up here, but it can happen for then a move to the downside in an impulsive C as well. If you then look at the other scenario, the low time frame bearish, this is an alternative scenario I have at the moment. Price basically would go to the downside and take this low over here, and then a WXYXZ. Most common target for wave Y in a WXYXZ is the 1-to-1, which has been reached perfectly, so that's very nice. Now we are ranging on top of the rare target for wave Z. However, wave Z, you would expect it to be lower or go lower than wave Y. So the most common target for wave Z is the 1-to-1-to-2-3-6 Fibonacci, which also has nice confluence with this target box over here that we haven't reached just yet, between 27.162.2k basically and 26.9k, because we actually just missed out on hitting this target box with the wick down here. So if price would move to the downside, this is definitely something I would be looking for then a potential long setup, stop loss below the lows, trading it to the upside for then a wave B. And also important to know is the reason stop loss is constantly below these lows. Yeah, because if we go below these lows, I do think a drop to the downside is very, very likely, where the next support area for me is all the way down here, which then starts at 24,850. So it's quite important for price to stay above these lows, because I think if we take these lows, a move to the downside is just very, very likely. And if you then go to the macro scenarios that I have for you here on the chart, what is happening at the moment is this was a very nice three-wave structure, a zigzag, where the targets were reached. Then we created bearish divergences for this potential short setup as shown, for then a first target being this target box over here, which we have now basically hit kinda 3 times, one can say. And of course, the more often you hit a target area, the weaker it gets. However, in this particular scenario, we are looking for this to be a 3-wave in W, then a 3-wave in X, and then eventually looking for a Y to the upside. So this potential trading setup is laddering the longs in this area over here, and then stop loss below this low for a move to the upside. Also important to note is we do have some bullish divergences. Those of course can be leading. Divergences are never 100% win rate, just take that into account, but it's at least it's important to know, right? And I think it's, for me, it's important to show you guys what's happening here as well. So we have a low over here, right? Making some higher lows on the chart, but we're making lower lows. If you look at the yellow line as well as the blue line, we're making lower lows on the CVD, which means there might be some absorption going on. So people are selling. There's basically more people selling over here than there were people selling over here. However, price is higher. So someone is absorbing the shorts for then potentially a push to the upside, which is very interesting. So yeah, this is an interesting scenario, and also on the micro currently my preferred scenario as well, where the bearish, or at least more bearish scenario, I suppose, is this 3-wave being an A. Then we're looking for a B to the downside, which is taking this low over here, for then eventually a move C impulsively to the upside. So basically having an expanding flat A, B, C, where we would also reach this target box, and then the trade over here is the same, lettering the longs on this target box over here, stop loss below as mentioned, and then eventually trading it to the upside. Now, if we look at the news, it is important to mention that today at 2:30 we have a little bit of like a minor news item, the orange flag over here. However, tomorrow, Friday, 2:30, we do have some, well, probably it's going to be a very volatile day because we have quite some news coming up. So definitely trade safe, especially tomorrow, but of course anytime. Make sure you have your plan, your strategy, your entry requirements, and you know what you're doing. So it might be possible that tonight at 7 p.m. I can't make a video because I have to speak at an event, but nonetheless, I hope this video at least was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.